Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has continued to balance within a range, and the overall market context hasn't really changed much since yesterday. So heading into the open, we're going to be using 28 to 30 quarter as the initial support zone, as well as the micro bull bear zone. And as long as buyers are holding ES above 28 to 30 quarter, there's still a shot at going higher into 35 quarter to 36.75 and then 38 half to 40. In order for the market to put in any kind of sustained breakout beyond 38 half to 40, we will have to see broad market strength and some decent and sustained upside momentum. So in the event that the market attempts a breakout beyond 38 half to 40 and those real-time signals are present where the tick is holding above zero and it's printing some decent upside values, the advanced decline line is strong and it's trending higher, the other markets are participating in the upside, then the market could go up into 42.75 to 45 quarter. And if it is in breakout mode, then we'll have to be cautious at 42.75 to 45 quarter, because if there is sufficient volume and momentum, then we could even see a move up higher into 46.75 and the 47 half gap. And then we have the all-time high at 49 half to 51 half. So in the event that the market tries to break out beyond 38 half to 40, the question is going to be whether the real-time conditions support a sustained upside breakout. So if there is that upside momentum, broad market strength, some better volume, then the breakout could actually sustain. But if the market attempts to break out and we're not seeing any upside momentum and the other markets are diverging, then it's going to make it difficult for that breakout attempt to really work out. And then on the downside, in order for the market to put in a balanced breakdown below 28 to 30 quarter, we'll have to see the opposite. We'll have to see excess weakness, a weak advanced decline line that is trending lower, and sustained downside momentum. Now, the previous close is at 31.75, and the advanced decline line is calculated based off the previous day's close. So for ES to break down below 28 to 30 quarter, the advanced decline line doesn't have to be extremely negative immediately. As long as it is negative and trending lower rapidly, that'll be sufficient for a sustained breakdown below 28. So that's just something to keep in mind, that the AD line does not have to be extremely negative in order for the breakdown to take place. It just has to be negative and then rapidly getting weaker. The more important thing is whether we are seeing a lot of downside momentum in the event that the market tries to break down below 28. If we're seeing a lot of downside momentum and the other markets are also heading lower, so there's some alignment between the markets, then there would be a shot at going down towards 20 quarter and the 16 quarter to 1875 zone, which is still an area where responsive buyers can be active. So until the market puts in any kind of break, either beyond initial resistance or below initial support, it is stuck in a range and our short-term bias is going to remain neutral. And then if the market attempts to break out beyond initial resistance or below initial support, we're going to have to assess the real-time situation to determine if it actually supports the idea of a bigger breakout or a bigger breakdown. Otherwise, we're trading in a balance, our bias is neutral, and when that's the case, you want to be much more careful with trade location and not get involved in the middle of the range, because that can be a chop area. So the only time you'd want to get aggressive is when the market is showing you very clear-cut signs of strong directional conviction. If we're not seeing that, then it's safer to assume that the market is still in a very balanced state and focus on getting good trade location, or just stay out until the market provides some clarity. So those are the main ideas. Heading into the open, let's see how ES responds to the initial support zone and the pre-market and initial resistance, and we'll take it from there.